Hi everyone, delonewolf here. Welcome to EVE Talk, your weekly look at the market in EVE Online. And again, I'm going to thank a lot of the people that have been welcoming us in Providence. It's so much information, so much stuff that we need to think about. I'm actually going to take it slow, going to try and digest things and try and explore things one at a time. Just so that I can also explain it decently well to new players. But yeah, the response actually been overwhelming. I get a lot of mails every day. I try to respond, but you have to give me a little bit of time to get settled, to figure everything out, and just to try and have fun. Of course, it doesn't have to be work for me. Anyways, we are here for the market, and you may have spotted it already, but it is quite a week, honestly. We will start right away with plex at 55 seconds, and that is not looking good for people that are looking to pay their subscriptions with plex. 1.19 billion ISK for plex, an increase of 10% in 1 week. That is quite a lot. Here is the chart. As you can see, it is a complete breakout. And that is probably going to start some forum threads, probably some Reddit threads as well. And the talk of the day, I think, is going to be: is plex in a bubble? Is this a bubble, or are we really going to have to take into account that plex will just be higher than 1 billion from now on? I think it could be that plex will not go lower than 1 billion anymore. But considering how fast this increase in price is right here, I do think we are in at least a little bit of a bubble. The question is, of course, how far back down do you see plex go at some point? What could that be? Maybe a plex sale for Amsterdam, for the Euro Tour that CCP is doing, something like that. But this is extreme volatility right here. Plexes are going just way up. This should be close to the highest point it's ever been on TQ, and this is going to be rife with speculation. I wouldn't be surprised that these are actually a couple of big parties that are once again going into their plex manipulation, trying to make a lot of profit out of this. It is definitely not a sustainable increase in price. Is the price itself sustainable? Obviously, there's always just the phrase that something is worth what the market is willing to pay for it, and well, at the moment the market is willing to pay 1.16 to 1.19 billion for a plex. So yeah, that margin, 30 million, that's not a lot. So there is still demand at this point, although of course, is this someone else trying to prop up the market even further, trying to get more profit out of it? I'm not sure, to be honest. So this is very interesting, and I guess if I'd have a question, we'll just get right off the bat with this one. What do you think plex are doing? Is this a bubble? If you think that this is a bubble, then what would your floor be? Where would you look at plex correcting towards at some point? Do you think that like 1 billion, that we won't see plex below 1 billion anymore? Or do you think that this is not a bubble, that this is actually 1.15 billion, 1.2 billion, that this is just the right price for plex? I'd love to know what your thoughts are on this, because I saw this number when making the ticker there, and I was like, oh my god, that's crazy. A 10% increase at what I think a lot of us already considered a pretty high point is quite significant. Anyways, let's take a look at the multiple pilot training certificate. That one is moving in tandem. We're looking at 1.2 billion for the sellers, 1.06 billion for the buyers. So both of those well above 1 billion. And I think a big question is going to be, are they going to stay there? Let's take a look at pilot's body resculpt, which last week seemed to move in tandem a little bit, going up as well. But as you can see, correcting back to 220 million. So there is no real connection to be found between the body resculpt and then the plex and the multiple pilot training certificate. It's interesting. It's not what I expected, but this is clearly its own little market, its own little niche right here. Very small market as well. I mean, maybe 5-6 units a day on average. I would say. Moving on to minerals, let's see if this huge plex spike will have like an impact on that. 510 for minerals, and let's start with titanium. That seems to be stopping its increase in price, but only temporarily, so a little bit of a dip back down at the tail end here, but bouncing off 5.4 ISK, so not bad. You know, we went as low as 5.10 to 5.2, and now we are going back up from 5.4. So 551 for the sellers, 537 for the buyers. Decently small margin, but 0.14 ISK. That's actually not bad. We've seen margins of that were way smaller than that before. So this to me indicates that maybe the market is planning to find its price here. You don't see that many very new orders for titanium, so supply is stalling a little bit. Demand is still pretty healthy, 1.6 billion, 1 billion, 1.5 billion, 2 billion, way bigger in number than the sellers. So I think this gives credence to the fact that these are players and groups that are preparing for the new citadels. One comment that I got, and that could be right, but we're not entirely sure, is that boss at the moment is made from PI stuff, not from minerals. And so it could be that all of this speculation will turn out to have been for naught if the new citadels will be something that you actually make with PI stuff. But I'm actually thinking that it'll have a bit more of a capital ship system, where you actually have to build citadel parts, bring them all together in one big blueprint that will then form the citadel, and then the basis of it I do think will be minerals. That's my guess. I admit that it is a guess. I don't have that information, but I think that's where we'll be heading. We'll have to see once maybe they hit the test server or something like that. We'll know more. Let's see what Pyrite is doing. Very similar move right here, went up nicely to 11.4 ISK, moving its way back down to 11.2. Let's see if there is some hesitation here. I would say yes, buyers 1106. Demand here 350 million, another 64, another 270 million. And is the music maybe just a touch too loud? Let's get that one back down to maybe 15. So 1106 for the buyers, 1144 for the sellers, and supply demand here I would say is pretty much balanced right here, because you have 354 million, 327 million here, another 200 million here, another 270 right there. So I think we're looking at 11.2 ISK for Pyrite on average, and from supply demand we could just be heading for stability at around this price range. Let's see what Mixalon's been doing. That one's been able to hold on to almost 52 ISK, not bad considering we come from 42. Pretty nice increase in price in 2 steps right here, and just below 52, I think the market seems to indicate that this is where we want to be. Supply, you can see a decent amount of new orders, 20 million, 6 million, another 15 right here. Demand pretty robust as well, 67 million, 20, 14 right here. Again, 47 million, another 150 million. So I would, again, just like with titanium, have to give a slight edge to demand, but that a supply gap like that can actually be filled decently quickly. So I would say that this is indicating either a sideways movement, so more stable prices for now for high-tech minerals, or maybe a slight increase in price yet, because this increased demand again I think could be because of preparations for the new citadels. Let's see what Isogen is doing. Again, decently similar. We saw a bottom not too long ago, like first part of July. Then we went back up to 115 ISK. A little bit of hesitation here, but it does look like Isogen wants to go back up once again, heading towards 125. 135 for the sellers, 123 for the buyers. So that is clearly a serious upswing right here, almost reaching the price we had 6 months ago. That's actually pretty important considering what we saw in the previous minerals. One thing I do have to say, I think that Isogen is not that easy to mine in big numbers. The side products are always titanium, Mixalon, possibly Pyrite. So I think that could be why Isogen is the first one to move back on its price point from 6 months ago. But it is very interesting. It gives another indication that there may just be more demand than supply a little bit at the moment, and that the other high-tech minerals actually have a chance to go higher as well, despite the fact that we're not seeing it right now on the chart. Just a little bit of tentative signals that I'm getting from more demand than supply in a few of them, but the fact that Isogen has made this move right here all the way back towards 130, I think is pretty significant and could be an indication that the other high-tech minerals could go higher as well in the upcoming weeks. Then we'll take a look at Noxium. That one, yeah, doing its own thing. I mean, you have a little bit of that pattern here as well, except that the bottom was in like August, then a little bit of a move up, but that corrected back almost completely towards its bottom of 480, and now it's just staying between 480 and 500 ISK, 490 for the sellers, 475 for the buyers. And so compare that to Isogen, which has made back almost all of the lost ground from the last 6 months. Noxium is still, well, extremely low on the chart, and so I actually think that it could be a decent investment, because you will need Noxium in those new structures, if it turns out that you need minerals for them, of course. And if there's one mineral that I think still has a way to go to get back up there, it would be Noxium. I guess Noxium is the in-between mineral. You can get it from Isaac, but you can also get it in pretty good quantities from Nullstick and Wormhole space, and I guess that's why it has influences from both of them. So we saw quite a bit of a comeback from the Isaac minerals, but we also know that the Nullstick minerals have actually been dropping back from their highs, and Noxium is just pretty much staying where it is. But the interesting part to me is that it is staying at a pretty low point for the last 6 months, and Noxium is actually something that can be speculated on, that can have, speculators can have a big influence on that, because there are multiple sources from it. And once one of them, they know exactly, let's say, what the Isaac minerals have been doing lately, increasing supply or decreasing supply. If then you're at the handles for the Nullstick supply of Noxium, if you know or can have some influence there, you can actually make some really big movements happen there. So yeah, interesting. I do think again that I will try to purchase some Noxium at these lower prices right here. And then the Nullstick ones, let's take a look at Zydrine, which still on a downtrend. It may be slowing down now that Zydrine is coming close to 1000 ISK once again. So 1088 ISK for the sellers, 1043 for the buyers. Supply, let me see here. Not that many new orders, a few 100,000 right here. Demand is starting to pick up here, a million units here, a few 100,000 here again. All of this is actually new, another 2 million. So I think Zydrine is going to slowly find its bottom. And so that could actually indicate that the influence from Nullstick minerals decreasing in price on Noxium could come to an end as well. I think it's pretty interesting, but it's probably going to slow down now, because there is clearly more demand than supply at these prices. At least that's how I'm seeing those numbers. And here is Megasite. Pretty similar, went back down from 2200 to 1600. Now it's really moving in the 1600 to 1800 price band, so we're right in between that. 1448, 1537 for the sellers. Margin not that big. Demand right here, all of this is pretty new, so I'd say that supply is still pretty strong here though. Megasite, you're ruining my analysis, but there's still a million here, 300,000 here, and this entire front page is still new, so there is still supply pressure on Megasite. It's gonna be hard to time when these Nullstick minerals will actually find the bottom, because I would not be surprised if Megasite will still drop back down a little bit towards maybe 1400 or something like that. I think it's still in the cards. And after that, after both Megasite and Zydrine have settled, I'd say look out for Noxium, because that could be a trigger. And then finally, Morphite. That one is slowly going back up, but still 13,000 discs, 12,000, 13,000 discs. This is not a huge movement or anything that I can say is outside the bounds of normal market variations, normal supply demand stuff. Maybe a few sources have been cut off or something like that, increasing the price here, but it's not a huge spike or a huge correction or anything like that. It's basically where the price has been since the mineral changes. Let's take a look at the impact on Tech One chips then. 1520. I do think it's going to be pretty limited, considering that the high-sec minerals are going up, but the null-sec minerals have been going down as well. So let's take a look here. This is the Armageddon. Although settling at a higher price, it's now sitting around 200 million, and that's just where it is. The Armageddon is a really good chip. For me personally, I do love the idea of having drones and missiles, those two weapon platforms. A combination of that I think is really strong and powerful. Stable in the last few months, definitely up from 6 months ago. Here's the Caracal then, finally dropping back. There's always a lot of volatility in the Caracal because it is an null-sec doctrine, but seeing it go back towards below 11 million is pretty important. So let's see if we can at some point hit 10.5 million. So 10.8 for the sellers, 10.15 for the buyers. Not bad. I think it's in the cards that the Caracal could find its price back towards an average of 10.5. You can clearly see that before all of the mineral changes, the Caracal was hovering around 10.5 as the price, and you still had the spiky behavior, but that was where it hovered around. Mineral changes hit it and increased the price by about $1 million, something like that, still 10%. Not that insignificant, but it looks like we're finally breaking that trend and we're heading back to where we were a year ago or 6 months ago, an average of 10.5 for a Tech One cruiser for a Caracal. So I think that all of these mineral changes have finally been digested by the market, and that will actually pretty much end up for Tech One production, which is impacted by all the minerals. It looks to me like we're heading towards settling back where we were a year ago, 6 months ago, except for a few ships, of course, which may need more null-sec minerals than high-sec minerals, like the tier 3 battle cruisers, which are settling at a higher price. But for most of them, here's the Dominic's chart at around 200 million, dip back below towards 190 here at some point. So if I go back for the 1 year chart on that, yeah, again, we are still a little bit higher, but it's trying to come back to 190. So let's hope that we will go back down here once again. That would be a good story, for a good example for my story that I'm trying to explain here. But the one thing also that I did note is that I always said when the mineral changes were announced that I expect a bigger impact the bigger the ship, because you need way more minerals for them. And so the Dominic settling a little bit higher, I think, could still be sort of normal, and then have a smaller and smaller impact the smaller the ship goes. So this is no, I want to go back to 6 months. For over the last 6 months though, pretty stable Dominics at around 195 to 200 million on average, not bad. Here's the Drake chart then, also slowly heading up. So proving me may be wrong, but keep in mind the Drake was at a very low point of 48 million. It had been hit by quite a few nerfs, and so I actually think that with the new modules for missile launchers, the Drake may just make a little bit of a comeback. Not that it's going to become the ship once again all of a sudden, which it was for quite a while in EVE Online a few years ago, but going from 48 to 54 million is actually not bad for a ship that was considered to have been nerfed into the ground. So I think that that's what's playing with the Drake chart here. Then we've got the Mauler. That one is actually showing that stability in the last few months quite nicely. A few spikes, probably big purchases. Let's touch on the 1 year chart here. That's a lot better. 11 million for a Mauler. We've been there before. We're here once again. So yeah, the cruisers, I do think the cruiser market has pretty much digested all the volatility that happened in the minerals, and may need maybe a little bit more time for the battleships, or it may just be that the average price has gone up just a touch because the increase in needed null-sec minerals in those ships. Here we have the Myrmidon chart, again 54 million on average, we're right around that. It is actually a 3-month chart, not so good to show that, but on 6 months we start at 51, we end at 55, but we are on a high point. As you can see here, on average 53 million to 54 million, something like that is definitely in the cards. Let's go for the 1-year chart. Here you can see yeah, slight increase of that average, but I would say from 51 to 53 million, that's 2 million increase. That's not as much as what we saw with the battleship, with the Dominics, or with the Armageddon. It's a bit more than with the Caragal. So this is definitely in line with what I'm thinking. CCP increased the need for null-sec minerals across the board, but the bigger ships needing more minerals in general have seen a bigger impact because of that. But in general, all of this has been digested pretty well by the Tech 1 market. Here we have the Oracle. That's a tier 3 battle cruiser, so that one is clearly settling higher, I think, because from the start they had a bigger portion of null-sec minerals in there. Here's the Raven chart, really nicely stable at 182. Could be interesting to go for the 1-year chart. Yep, definitely we see that pattern again. I would have put the Raven before that at maybe 175 on average. Right here you can clearly see that the chart was doing its movements around this price point, and now we are settling almost 10 million higher. So again, a step up from a battle cruiser, way more of an impact or an increase than a cruiser, which is almost nothing. So pretty interesting to go back and look at this pattern from 1 year as well. But overall, the Tech 1 market is stable, is well supplied. It's just a healthy market that's I think is very good for the game in general, because Tech 1 ships are the ships that you use and that you lose. So you don't feel like you have to be careful losing some Stabbers, losing some Vexors, losing even some Armageddons or some Ravens or something like that. You know exactly what you're gonna have to pay for those ships. Here's the Mauler, then again very stable in the last few months, some volatility before that. I'll touch on the 1-year chart. Look at that, just below 10.5 million before, just above 10.5 million now. A very small impact from the mineral changes. In line with what I expected, very good to see. Tornado, tier 3 battlecruiser, settling quite a bit higher, but that's actually normal at around 74 million. Here's the Typhoon, another battleship. So over the last 6 months, pretty much stable at around the 176 price mark. Let's go for the 1-year chart. Yeah, look at that, 165 to 175. So again, that increase with 10 million, it's less than 10%. Even on the battleships, but you can see that the bigger the ship, the bigger the impact has been. And here's the Vexor, stable at 11.2 million, maybe up just a little bit over the year. Not even that, the Vexor is right where it was. For an entire year, the Vexor has been extremely stable, varying just between 10.5 to 12 million at its highest volatility, and sitting right in between 11 and 11.5 million for pretty much most of the year right there. So Tech 1 market, I think it's looking good. I think it's looking healthy. There are some signs that minerals in general are stabilizing as well, although the high-sec minerals made back quite a bit of ground, and then the null-sec minerals lost a bit of ground from their highs. But overall, this market looks pretty healthy, where all the parts of the chain are working pretty well. Moving on then to the Tech 2 market, 23.55 for that one. Let's see if there is some trade potential to be found here. Once again, last week was a little bit disappointing, although there is some volatility in the market. Here we can again see the Basilisk just settling at around 195, which is right in between a previous top and a previous low. So I would say Basilisk, it's not the right time to do anything in this. Here's the Cerberus charts dropping quite a bit lower now, so maybe on the buy orders it's coming in interesting territory. Still, we're looking for Cerberus close to 180 as a good buy, and buyers are at 191. So again, it's still too early to make a move on these, in my opinion. because the buy orders still have quite a bit of retreating to go. Here's the annual then. These assault frigates, they don't show the volatility I'd like to see for actual trades. So again, that's a little bit of a no. Here's the Guardian. Yes, thank you Guardian, showing that that I am that the Tech 2 market is still alive here and there. So starting at 130 as a bottom, now we are selling Guardians for 153. The top of the chart went as high as 170, and that's like a 40 million increase, almost one third of the price. Not bad at all for a movement that was not visible at all last week. So that's what I mean by the trade potential. Although these charts may look somewhat similar to a Tech 1 ship, keep in mind this is just an order of magnitude larger. We're talking jumps here of 5 million, where in the Tech 1 ships the charts here make jumps of like 500,000. This is where you make money doing some trades. And the Guardians, of course, if you still have them, yeah, maybe you can try and sell them at a profit. Of course, you did miss the top. This is going back down drastically at the moment already. Next up, the Hound here, going back down towards 17 million. Where are the buyers at? Are they below 16? No, they're still quite a bit above 16. So at some point they will drop below that, close to 15 million. Then you're definitely on the right track for Hounds. Unfortunately, right now, I would not say it's a good move. Here's the Ishtar, also doing quite a nice little movement, going from 160 to 175, just above 10%. Not so bad, considering the Ishtar is already the ship in the game. I was not expecting us to get good trades out of that anytime soon because of Ishtar Online. You know, it's just been such a popular ship and such a good ship that it's being hit by the nerf bat as we speak. And seeing this move up here, not bad for something like the Ishtar. So if you have a few that you need to sell or that you want to sell, this could actually be a good time to do so. Next up, we've got the Manticore dropping to 24 million on the chart, but again, you'd need the buy orders to be below 22 million by quite a bit to be sure to hit the bottom. We're not there yet. Next up here, we've got the Nemesis. Again, chart right in between, a top at like 22 million, maybe 21 million, and then a bottom of 18.5. Nope, not the time to make a move here. Here's the Oneros, finally going down from a bit of stability around the 150 marks. That's pretty decent. And the chart is heading to 140. Where are the buyers at? 135, 995. Keep an eye on that one. I'd love to see them a little bit lower, but a buy order below 140 million, considering this chart is not that bad just yet. So the Oneros may just be the one Tech 2 ship so far where I would say keep an eye on maybe a buy opportunity on this one, because we are already dipping below here on the buy order side of things. So that could be interesting. Once the chart tends to go down here as well, then look out for that trigger and some volatility and a potential sell opportunity. But right now, yeah, maybe keep a close eye on the Oneros. Here's the Purifier, again coming off of a spike, but probably still too early to make a move either side on this one. You can see that it's not as low as we'd like to see it. You know, you can probably pick up Purifiers below 16 million. 18.5 for the buyers, we're not anywhere close to that. And then on a good day, you can sell them for maybe 25, 26 million, something like that. We've not seen that many volatility periods for the Purifier in the last 6 months. It's good to see that it actually still happens. So, if we see something that's stable for an entire year, well, then we may just want to remove that ship from the ships that we do check for trade potential. So the Purifier showed a little spike, I think last week. It's coming back down, but your sell opportunity is over, your buy opportunity is not here just yet. Next up, the Scimitar here, working on a high again. Close to 145. Where are the sellers at? Yeah, 143, something like that. Buyers 136. No, I would say maybe if you still want to sell a few, that could still be a good idea. If you can sell them for profit and you've bought them close to this bottom right here, 120, 125, you can still make a decent profit on them. But I would not put fresh money in the scimitar market at the moment. And here's the Vengeance, actually working on a high, but again, this is an assault frigate. It doesn't show those same patterns. So I think maybe if you can produce them or sell them, sure, this is the right time. But for short-term trades, I don't think that the assault frigates are too hot. If I look at anything, it's really, once again, the logistics cruisers that are showing some trade potential for this week. Keep an eye on a couple of those. Maybe the Oniros could be something where you could put some money into at the moment. But yeah, Take 2 market, not too hot in the last few weeks, although still alive in some of the individual ships. Next up, Take 3 market, 30.15. For that one, let's take a look at what some of these destroyers are doing. So the Confessor settling at 42 million. That seems to have been something that needed to happen. Not sure what the trigger was, but most of these tactical destroyers went as low as 34, 30 million, 35 million, something like that. But all of them seem to have corrected back up towards 40 million. So the market apparently needed that. But here we do see that the Confessor is just right on top of the 42 million mark. And the supply is here though. 199, 179, 30, 48, 20, 24. So there is still a lot of these ships being produced. I guess they just became a little bit more expensive to make, increase in price because of that, or something like that must have happened, because the huge supply numbers don't support an increase in price like that. It must be something else. Here's the Hecate then, settling at, well, we'll have to see because the chart is not showing too well at the moment, but 42.5 million, very close to the Confessor. And again, 25, 96, 21, 24, huge supply numbers in the Take 3 market. So I do think it is something that was cost related. Next up here we've got the Jackdaw, very similar, 45 million for the sellers, 42 for the buyers, which is right on the money. And look at that again, 30, 50, 23 are the last 3 sellers coming in. This is gonna put some pressure on the Jackdaw. I would not be surprised that 40 to 45 million is actually going to be the new price range for these destroyers. Here's this Vepel then, 44 to 46 million. Interesting. 45.5, but again, look at that, 36, 32, 43. It's the most expensive one. People are bringing in quite a few of them to the market, putting some pressure on there. But it could be that the new bottom for these destroyers is going to be closer to 40 million rather than 34 million. I think that's what's happening here at the moment. Next up, the cruisers. Here's the Legion. Pretty stable at 150, made a bit of a comeback off of 140, which is really quite affordable for a Legion. So I guess that people, maybe an alliance or something, made a move on Legions between 140 and 150. You can still see the supply pretty healthy. All of this is new, 10, 6, 2, 2, 2, quite a few sell orders here. Although we don't see the huge numbers from before these destroyers coming in. There is still quite a lot of supply in the Take 3 cruisers as well, putting constant pressure on the price. It's very hard for these ships to break out. Next up here we've got the Loki, again hitting a low of 140, making a move up to 150, but there's just so many Lokis that are being sold for 150 and over that I think whoever bought them said, okay, that's enough. They'll drop back down because of the oversupply towards 140 again. No need to buy Lokis at 150, 155, 160 at the moment. Next up here is the Proteus, again very similar, hit a bottom close to 140, went up to 150, maybe a bit above that, yeah, 158 for the sellers. So maybe they went a little bit overboard on the Protei, but I think what we'll see very soon is big numbers in Proteus supply coming in because it is more expensive. You can already see here 222, all of them very recently, just bringing the price back down. So by next week, honestly, I think the Proteus will be coming back quite a bit, and we'll see quite a bit of overproduction in the Proteus. And then finally the Tengu, which went pretty low as well on the chart, touching 140. Again, a trigger, went up as high as 160. Are we seeing the pressure? Absolutely. Look at that. The Tengu went, let's see how high on the chart. Data points above 160, close to 165 or something like that. What is the response? all of this entire front page is new. 3, 6, 5, all of this is new, competing, trying to sell those Tengus now that they can get close to 160 on them. That pressure is huge. The industrial potential of Tech 3 ships is just higher than what's being consumed at the moment, so don't expect this to last very long. If you have Tengus that you want to sell, I'd say try it now, but it's going to be very tough to actually sell close to this price, because it's just coming in like a flood on whatever is the highest at the moment. And then finally, I did not get any suggestions last week, so we'll check on the isotopes. That's something that someone once requested I check decently often, and so 35.20 for that one. We'll just touch on it. Could be interesting. It has an impact on the fuel market, things like that. So here's a 6-month chart for helium isotopes. Started at almost 620. We're definitely up on 6 months, but went up very violently up to 800, and now it's slowly correcting back down. How long will this downtrend here last? I don't know, but 700 ISK for helium isotopes is not that bad. And if I'm not mistaken, I actually bought close to this bottom, or maybe was it this bottom at 720? Not entirely sure. At some point I did buy, or I actually think I bought oxygen isotopes here. I think that is possible. Not entirely sure. I need to go back and check my my inventories on this. But helium isotopes went up very violently from 620 to 800. Now it's slowly correcting back down to 700. I'm thinking that supply demand is looking pretty good. Yeah, look at that. All of this is pretty much new, so there is definitely a lot of supply, some pressure, new demand, not that much. A lot of these orders are older. So slow downtrend, I think, because there is just more being brought to the market than is being consumed at the moment, and no sign that that's gonna stop at the moment. Here is hydrogen. That's quite different, pretty surprising. Started at 660, went down to 630, and it's only very recently that it spiked up to 730, and now it's still in a very volatile period. I think we'll see more supply here. Yeah, all of this is new. 5 million, 2 million, 5 million again. So there is oversupply, there is pressure on the price, but it's still in a very volatile period. So I would say that pretty much hydrogen isotopes are 4-5 months behind the helium isotopes. So I think we're going to head towards a more stable period of just generally going down for hydrogen isotopes. Next up, we've got nitrogen isotopes, again something very different. So this is a weird and interesting market. It's tied to, I think, ice mining and possibly fuel consumption and production. And starting at 800, again reaching a bottom here, but a very gradual increase in price towards actually a 6-month high not that long ago. And apparently some will from the market to maintain that, because we went back down violently, but correcting back above 840. So here, supply wise, not bad, but I guess there's just a lot of demand. Pretty much this entire page again is new demand as well. Interesting how all of these are very different from one another. Next up here we have oxygen isotopes. That one is then, I would say, pretty stable. Started at 700, stable for quite a bit. A little bit of spike up, correction back to 700, and it's looking like this is where it will be once again. So weird markets, and all of them are doing something completely different from one another. So oxygen isotopes, if you're looking for stability, that's where you want to be. If you're looking for a high point, you've got nitrogen isotopes. If you're looking for something that's volatile but is probably going to correct, it's hydrogen isotopes. And if you're looking for something that's going to be cheaper, the further we go into the future, I think helium isotopes is where that one's at. So sort of strange how all of these are very, very different from one another. There you go. This week's extra was the isotopes. For now, thank you very much for watching, guys, and I'll see you all next time.